back, everyone. Before we dive into the video, let us understand or talk about a situation, or maybe it's your future. Imagine you started your own small business, let's say a cozy little coffee shop, because who is not interested in business and they are in commerce, right? So, let's say it's a cozy little coffee shop. You're excited, your customers are coming in, and money is flowing. But wait, how do you keep track of how much you're earning or how much you have spent on coffee beans, rent, and salaries? What would you do? Well, that's where accounting books come in. Just like a diary helps you remember important events in your life, accounting books helps a business keep track of its financial story. Every rupee you spent, earned, or borrowed or owed, everything will be tracked. Today, we are going to explore the different types of books in accounting, each with its own purpose, just like chapters in a book. Whether it's recording daily transactions, tracking what customers owe you, or summarizing the overall financial health of your business, there is a book for it. Let's dive in and uncover these essential tools that keep everyday business, from your coffee shop to a multinational company, running smoothly and legally. Here comes the first type of book. Let me just tell you, the types of books are only divided into two. One is primary books and the second one is secondary books. So, starting with primary books. A primary book is considered as a book of the first entry or primary entry. It is a book where all the business transactions are recorded on the daily basis in a systematic manner. Whenever a transaction takes place in business, they are first recorded in primary book, which is also known as journal. The process of recording the transaction in journal is called journalizing. Hence, down if you can see, it is the performer of the primary books, which is date, particulars, LF, debit, and then credit column. As we know, any transaction has dual entry, one which affects the debit column and one which affects the credit column. So here if you can see, some cash has been debited, which means some cash had been come into business by as a capital. It came as a capital. So that is the reason. So as a capital, which is credit. Primary books or journal are further classified into different categories of books, which are commonly known as subsidiary books. Subsidiary books are the accounting books of original entry, under which transactions of similar nature are recorded. For example, credit sale transactions are recorded in sales book. Credit purchase transactions are recorded in purchase book. And cash related transactions are recorded in cash book. Subsidiary books are the subdivision of journal, because of which they are also known as day books or books of original entry. Now let us understand the different categories of primary books. First one is purchase day book. A purchase day book records all the credit purchase transactions taking place during a day, week, or month. It depends on the company and the owner. At the end of certain period, total of the purchase book is transferred to the purchases account. Now, different kinds of primary books are made or subsidiary books are made because if your business is small and limited, you can have only one book which is journal. But if there are many transactions happening in your company, you want to separate and put it neat, like all the purchases, sales, and everything separate. So that is why subsidiary books are made. Hence, in this purchase day book, all the purchase related items are mentioned. Then comes sales day book. Sales day book records all the credit sale transactions which took place during a day, week, or month. At the end of certain period, the total of sales book is transferred to sales account. This book is also called as sales journal or sales day book. The third one is written outward book. The written outward book is also known as purchases written book. A purchase returns book records the details of deficient and faulty goods that are returned back to the supplier. However, along with the goods returned, a debit note is sent to the supplier, which contains of the amount of goods returned that has to be deducted from the actual amount payable to the supplier. It is obvious, no? Like, see, you purchased some 10 goods in which two of them are not good or they are not useful, and you send them back saying that they are not good. So you have to get the money. In real life example, if I have to say, imagine you have ordered something online and that product had been damaged during the transport or anything. Now what will you do? You will not accept that order. You will return it back and you will ask for your money or return of that product. The same thing happens here. Either that amount had to be deducted or else the goods have to be sent again. Then comes the fourth one, which is return inwards book. Now, this return invoice book is also known as sales return book. A sales return book records the details of the goods returned by the customer. Credit note is prepared when the goods are returned by the customer, which contains of the amount of goods returned that has to be deducted from the actual amount payable by the customer. Now, the same thing is happening with return inwards book. Now, in the return outwards, it is we who are sending back to the supplier. But when it comes to return inwards book, we are the owners and the customers are returning back to us. And we have to deduct money because we are taking back those goods. Next comes bills receivable book. Bills receivable book records all the details of the bills which are to be received on sales. If you are selling something on credit, then the customer has to pay you. So all those transactions will be recorded in bills receivables book. Next comes bills payable book. Now this bills payable book records all the details of the bills which are to be paid for purchases. In the same way, when you buy goods or something from your supplier for credit, you have to pay him again. So all those bills will be recorded in bills payables book. Next comes cash book. Now here a cash book is a special journal which is used for recording all the cash receipts and cash payments. It is a book of original entry and ledger within. Cash receipts are recorded on the debit side and cash payments are recorded on the credit side. Therefore, the cash book is both a journal and a ledger. Now, within the cash book, there are four types. The first one is single column cash book. Now, here only the cash transactions are recorded in the single column cash book. And the second one is the double column cash book. Here, discounts allowed or received are also mentioned. Then comes the triple column cash book. This is a cash book where cash transactions, then discounts, and also the bank transactions are recorded. And the fourth one is petty cash book. Now, this is a cash book which is usually given to the workers of the company. Let's say there is some person in your company who is just meant to buy the little stationery that you require or all that minor financing, or the person who does all that minor financing in your company. To him, you'll give some cash and you'll give him this petty cash book in which he will mention all the purchases that he has done. If he had purchased some stationery for you, or if he had bought some uh, maybe medical thing or anything, any minor expenses of the company, if he had done from the money which you gave him, all that he will mention in this petty cash book and show you at the end of the month or whichever time period you give him. So that is all about cash book. The next one is journal proper. A journal proper is the last subsidiary book which records only those transactions that cannot be recorded in any other subsidiary books. This is also called as special journal. So, as we have seen, Purchase day book, sales day book. So purchases, sales, written outwards, written inwards, bills receivables, bills payables, cash book. All this is covered. So apart from this, if there are any other transactions, then they will be recorded in journal proper. So this is all about primary books. Let us dive into the secondary books. Secondary books are the books where transactions are recorded for the second time. The secondary books is also known as ledger. Ledger is an accounting book where the journalized transactions are being classified. It considers set of accounts and includes all types of business transactions, that is personal, nominal or real. A company can maintain ledger in two forms, that is bound ledger or loose leaf ledger. The process of transferring the debit and credit items from the journal to ledger in their respective accounts is known as posting. Below you can see the performer of ledger account. We have date, particulars, JF, and then amount. So one side is debit side and another side is credit side. Then the ledger is further classified as general ledger and subsidiary ledger. The general ledger is the permanent record of all accounts used in the business. It is a self sufficient secondary book where all the entries of primary book are posted directly or indirectly. It is also known as Book of Final Entry. All financial transactions of businesses are summarized in the general ledger. The next one is subsidiary ledger. Subsidiary ledger is a ledger which contains the details of general ledger. It reduces the burden on the main ledger. The subsidiary ledger consists of two types again, which is one being the debitors ledger. Debitors ledger consists of separate accounts for each customer and it will show the transactions entered into with the customers. For example, sale of goods on credit, collection from customers, goods returned by customers, bad debits, then discounts allowed, etc. The next one is creditors ledger. Creditors ledger has separate account for each supplier. For example, purchases on credit, cash paid to suppliers, goods returned, discount received, and the balance due to them. With this, we complete the types of books, which is primary books and secondary books. Now, in future, if you start that cozy coffee shop, you can have better financial statements. Thank you.